So I'd like to take a moment to introduce you to the Smith family. Smith family came into our office. They were a family in their mid-40s. They had done a good job at this point in their life saving. They were savers. They were good stewards of their money. They had been doing what they had been told to do. And one of the last things that they were told to do was to get an estate plan. So they went through the 4D estate planning experience with us. And I want to share with you a few of the things that we observed and the changes that we made that transformed their financial future. So the first thing that we realized with the Smiths was pretty obvious, that here was a family that had a couple of minor children, and they had no will or anything like that in place. So the first step that we took from their legal perspective was to establish a will and a trust to go along with that, so that the money that they had saved for the care of their kids is used appropriately for the kids. All of it bypassing the probate process. All those assets were coordinated to go into their trust to be able to take care of the kids should they not come home from work that night. Now we took it one step further. We looked at their financial situation. And one of the things that we realized was that they, like many other young families, had at that point in their life not diversified their savings. They had not gotten any life insurance for the family. They'd only used the group life insurance that they had available to them at work. See, they didn't come out of the point in their life where they were spending all of their money on daycare. They had a little excess cash now, and they were trying to figure out what to do with it. And so we guided them through our process, through our 4D process, look at the different pillars of wealth that applied to them, and they chose to get some private insurance. They also chose to start investing outside of their 401k. See, they'd already started putting a significant balance in there, but our assessment showed them that they were on the verge of creating a huge tax liability on those funds that they were looking to give to their kids. And through these two changes, a change in investment strategy, a change in their savings patterns, we were able to have significant benefit for the family, all with the same dollar. When we looked at their situation from a tax perspective, they didn't realize that they were building a liability, that the money that they were setting aside, that they were taking a small tax deduction for now, they were setting up for a tremendous tax bill down the road when they needed it the most. They never heard of the phrase called RMDs, required minimum distribution. And when we explained to them how that can have a cascading effect in their retirement years, they decided it was time to shift their strategies. So what was the end result from the planning that we did for this family? First of all, by setting up everything so that we avoided probate, they were now no longer looking at the potential for a $100,000 expense when they passed away. By changing their saving strategy to include permanent insurance as part of their overall comprehensive plan, we now changed what was going to be a tax liability to a tax-free asset that was available for their kids, as well as could be used for them as a rainy day fund throughout the course of their life and in retirement. Altogether, we dropped down the projected tax exposure for this family by at least 25%. All of it using the same dollars that they're looking to save and not changing their lifestyle, perhaps, just perhaps, improving it. Because now they had certainty, they had flexibility, they had a rainy day fund that they could count on. Most importantly, they had a rock-solid estate plan, a 4D estate plan, that would allow them to know that their kids would be taken care of if something should happen to them. What they realized is what makes the experience, the 4D estate plan experience, so powerful is that instead of them needing to go to multiple advisors to try to have their insurance, their investment, their tax, and their legal situation analyzed, they came to one place. They got it all. There are no retirement planners that can take care of estate planning. There are no investment advisors that can take care of estate planning. The documents. Now, through the 4D estate plan, everything is done in one place. So if any of the situations that we identified for our clients resonate with you, whether it's uncertainty about the future of your retirement, uncertainty about the way that your children will be raised when you're gone, uncertainty regarding your current cash flow, any of those things, if they are issues that are bubbling up in your mind right now, well, I urge you to take advantage of our complimentary 4D diagnostic process to help identify if these issues do rise to the level of problems. And of course, if they do rise to the level of problems that you'd like to deal with, then my team is ready to help you. Take care.